Here we can see where the Dow Jones Industrial Average, or the Dow Jones Irrational Average, as I like to call it, failed to stay above 34,000. I broke above it Thursday of last week. Friday, it still was above it, and in fact, reached as high on Friday as 34,302, which is where it closed. Monday, there was no trading activity. Tuesday, it opens above 34,000, but closes below 34,000. Yesterday, opens below 34,000, briefly goes above 34, but by the end of the day is a mile away from 34K as it closes down here at 33,296. What happens today? It opens down not only beneath yesterday's close, but beneath yesterday's low. And what makes matters even worse is that in this particular gap down, it saw no part of yesterday's trading range today. That is extremely bearish and doesn't bode well for the price going forward for the Dow Jones Irrational Average. So what does all this mean with the 34K, and why is this so important? Currently, right now, they're blaming it on the debt ceiling and saying that there's extraordinary measures that the government's going to take to pay the bills. And so that's what's being blamed for this recent tragic movement and price that we're looking at right here that I call a strikeout. But I'm going to get briefly right now into the larger picture here and why that 34K is so important. If you see here during the period of time prior to the market's fall last year, there was a particular formation, what's called a head and shoulders formation in technical analysis, and it's pretty much always bearish. You've got the left shoulder, you've got the head, you've got the right shoulder, and that formation typically leads to this type of negative movement in the price. Prior to that fall, the 34K level was serving as support. And as you can see here, there were times when it hit that and it bounced off of it, bounced off, bounced off, bounce. This time it didn't bounce, but it did recover and it headed back above 34K. But this was a very negative sort of signal here for what would be likely happening going forward. Because as you see, during this period of time that it stayed up here, which was a very short period of time, didn't last, and it ended up going beneath 34K decisively and staying beneath that level for quite some time. There you have an effort where that price tries to get above 34K. At this point, what was support has turned into resistance. Now the price has to get above it. All during the period of time that the price activity was here and did not fall beneath that level, there was bearish activity, but we weren't really technically in a bear market. Now we are, and we have been since this period here. You get this attempt here, strike one. The stock drops like a Led Zeppelin down to this area here. And there's a double bounce, or a double bottom, I should say. It bounces up and it runs back up. And that's strike two. And where's strike three? We've just witnessed strike three. What does that mean for prices going forward? Probably that we're going to see lower lows than what we've seen up to this point, and that the bear market is far from over. I could be wrong, but I don't think that I am.